Welcome back to Yahoo Finance Live. Earlier this week, Robinhood, ahead of its much anticipated IPO, disclosed that it was expecting to pay about $30 million as a fine to settle a probe into potential conflicts around anti-money laundering when it comes to their crypto arm here at Akiko. And when you look at that fine, I mean, you start stacking these up: $30 million for that, as well as we talked about before, the $70 million fine for FINRA. $65 million settlement with the SEC for payment for order flow issues. I mean, that's $165 million bucks across those three fines. That's about 30% of the revenue they showed for Q2 here, which, you don't expect these fines to keep happening, hopefully not, as the company matures past the IPO. But you wonder how much that overhang might have cause for concerns here on the mind of investors as the company looks to IPO here. I mean, 30% of Q2 revenue, that's nothing to sneeze at.
And that's a long list that could potentially be growing. We've got our very own Alexis Keenan, who has a story out on the regulatory hurdles that the company faces. And she's talking about at least 50 proposed class action lawsuits stemming from the meme trade and what happened there, too. So the regulatory risk, as well as any lawsuits that can come with what transpired around GameStop. I mean, that is a big overhang for a company that has said in their S-1 filing that while they saw explosive growth in the first half of the year, things could potentially be slowing down. And Zach, we talked about this a few days ago when I was looking through their filing. One of the things that stood out is, number one, the company's estimating a net income loss between $537 million and $487 million in Q2. But when you think about where the big drivers have been, options trading as well as crypto trading, Robinhood says a slowdown may be coming on that front as well. So it makes sense in many ways for the company to come to market right now. We're expecting the shares to begin trading next week. But remember, they wanted to come to the market even earlier, but that was held back because of some of the regulatory investigations that are happening. So to the point you made, I think earlier this week, you have to wonder if they've sort of missed that prime window, at least in listing publicly here, because that list, I would imagine, is going to get longer.
Yeah, well, luckily, I mean, if there's any silver lining here, we have seen the volatility that kicked off on Monday at least come down a bit. So maybe not going to be in that pocket of turbulence if they do come out relatively soon. But you're right. I mean, the concerns and the overhang here is definitely something I wonder how much pause it will be when we think about payment for order flow. In the first quarter, it was 81% of the company's revenue came through payment for order flow. And you have it coming at a time when the SEC is talking about that being a major focus, not just for Robinhood, but for other companies that are doing it as well, whether or not there is conflict of interest around the way that these companies are making money off of processing customer trades. And of course, that's why the SEC went after them with that original fine. It was kind of the way that they were framing some of the way they were communicating that to customers. And now everyone knows about payment for order flow. And we've heard Congress talking about payment for order flow. And you just wonder if you are a company out there that makes that much as a percentage of your revenue from something that is now getting so much attention, it does definitely dampen the excitement for Robinhood coming to public markets. But of course, they're making their ways around that, and they're trying to steam up some excitement from retail traders, even customers on the Robinhood platform. And I do wonder how much, that excitement we saw earlier in the year, how much the retail trade matters. I think we might get another look at how much, the retail trade matters when it comes to an initial IPO pop. In the case of Robinhood, since they were public enemy number one when it comes to payment for order flow.
Yeah, I mean, Robinhood does kind of address that in their updated filing, which is to say that despite the explosive growth that they saw around the GameStop squeeze and then, the other meme trades that transpired after that, there are questions about how many of those who opened those accounts will remain. And they specifically say if those users don't grow their deposits or trading frequency, our ability to expand and grow a relationship with these customers will be impacted. So there is a bit of a warning there on a potential slowdown. Of course, you could argue if you are looking to buy into the stock, well, it's tough to match up to the kind of activity you saw early on in the first half of the year. And Zach, finally, you mentioned sort of the brand of Robinhood. They've talked a lot about democratizing investment. They're staying true to their brand. They're going to be having a roadshow for the retail investors, a public one this Saturday. So it'll be interesting to see how many people tune in and eventually decide that despite everything that's happened, they still think this is a good investment.
An hour-long live stream, July 24th, CEO Vlad Tenev, who of course has been on the show. I respect it. I respect it. Going to the people, the road show out there, what is normally, dwarfed in secrecy in locked boardrooms, now coming out for the people who might be able to get in on the IPO itself. It's an interesting, break from tradition. We'll see how it all goes. But Robinhood coming to market with some different context relative to where we were thinking we might be last year.